This Bitcoin strategy could protect your family from collapse. It doesn't start with a crash. It doesn't start with panic. It starts quietly, almost invisibly. A small delay at the bank, a payment that takes longer than usual, a headline you scroll past without thinking twice, something about inflation, something about policy changes, something about temporary restrictions. At first, it feels distant, like it doesn't really affect you. Life continues. Work, bills, school runs, routines, everything seems normal until one day it doesn't. Imagine this. You wake up and check your phone. There's a notification from your bank. Due to unusual conditions, withdrawals may be temporarily limited. It sounds harmless, temporary, controlled. But then you try to move money and it doesn't go through. You try again, still nothing. Now it feels different. Not dangerous yet, but uncertain. And uncertainty is where stress begins. For most families, money exists in systems they don't control. It sits in accounts, moves through networks, it depends on approvals. We trust these systems because they've always worked. But trust is built on consistency, not guarantees. And history shows something most people ignore. Systems don't fail loudly at first. They fail slowly, then all at once. This isn't about fear, it's about awareness. Because the real risk isn't losing money in a bad investment. The real risk is being completely dependent on something you don't control. Now imagine a different scenario. Same morning, same notification, same restriction. But this time, you're not fully exposed because a portion of your wealth exists outside that system, not in another bank, not in another institution, but in something that doesn't rely on permission. That's where Bitcoin enters the story, not as a trend, not as a quick profit opportunity, but as a different kind of tool, one that most people misunderstand. Bitcoin doesn't ask for approval. It doesn't rely on office hours. It doesn't pause because of policy decisions. It operates continuously, independently, quietly in the background, whether markets are open or closed, whether banks are functioning or restricted. But here's where people get it wrong. They think Bitcoin is about replacing everything, replacing banks, replacing currencies, replacing the system entirely. That mindset leads to extremes, and extremes create risk because going all in on anything is just another form of dependence. The real strategy is not replacement, it's separation, creating distance between your entire financial life and a single point of failure. Most families never think this way. They think in terms of accounts, balances, budgets, but not systems, not structure, not resilience. Think about how other systems are built. Airplanes don't rely on one engine. Data centers don't rely on one server. Critical systems always have backups, not because failure is guaranteed, but because failure is possible. And yet, when it comes to money, most families rely on a single structure, one system, one layer, one point of control. That works until it doesn't. Bitcoin changes that dynamic, not by replacing the system, but by existing outside of it. It creates an alternative layer, a parallel option, a backup that doesn't depend on the same rules. And that changes how you experience risk. Because risk isn't just about loss, it's about lack of access, lack of control, lack of options. When everything is in one place, your options are limited. When you diversify across systems, your options expand. This is where the strategy becomes practical, not theoretical, not ideological, but functional. You don't move everything into Bitcoin. You don't abandon traditional systems. You don't make extreme decisions. You simply create a layer, a portion, a controlled exposure, something that exists outside the main system, accessible if needed, quiet if not. At first it feels unnecessary because nothing is wrong, everything works, everything is stable, but that's always when protection feels unnecessary. Before it's needed, the shift happens gradually. You begin to see Bitcoin differently, not as something you trade, but something you hold. Not for excitement, but for stability and uncertainty. And over time, that small allocation becomes something more. not just financially, but psychologically. Because knowing you have options changes how you think, it reduces pressure, it removes urgency, it creates space, and that space is powerful because decisions made under pressure are rarely good ones, but decisions made with option are measured, calm, intentional. There's also another shift that happens, and one most people don't expect. You start paying attention to systems, not just prices, not just markets, but structure. You notice how money moves, where control exists, where dependencies lie. And once you see that, you can't unsee it. You realize that most financial advice focuses on growth, returns, optimization, but very little focuses on resilience, on what happens when things don't go as planned. Bitcoin, in this context, is not about outperforming markets. It's about reducing dependence. It's about having something that continues to function, even when other systems are under stress. But with that comes responsibility, because control without understanding creates new risks. You have to learn how to store it, how to protect it, how to access it, because unlike traditional systems, there is no recovery, no reset, no support line. And that's why this strategy is not for shortcuts, it's for intention. It requires patience, consistency, awareness, not large amounts, not perfect timing, just steady accumulation. Small steps over time, and as that grows, so does your independence. Not total independence, but partial. And partial independence is powerful because it means your entire system doesn't depend on one outcome, one decision, one institution. It means you're not exposed in a single direction. And that's what resilience looks like. Not eliminating risk completely, but distributing it intelligently. So if something breaks, you don't collapse with it. You adjust, you adapt, you continue. That's the difference, because in the end, financial security is not about predicting the future. It's about preparing for uncertainty. And uncertainty doesn't require panic. It requires structure. A structure where your entire life isn't dependent on one system continuing to work perfectly. Bitcoin, used correctly, becomes part of that structure. Not the center, not the replacement, but the backup. The layer that sits quietly in the background, doing nothing until it's needed. And if it's never needed, then it simply becomes part of your long-term wealth. But if it is needed, it becomes something else entirely. It becomes access, control, continuity, and those three things are what protect families, not just from loss, but from disruption. Because collapse doesn't always mean everything disappears. Sometimes it just means you can't access what you already have. And that's the risk most people never prepare for. So the question is not, should you trust Bitcoin? Or even, will Bitcoin replace the system? The real question is, do you have a system that still works? If the one you rely on doesn't, because that's what protection really means, not betting on one outcome, but being ready for multiple. And sometimes the strongest position is not the one that grows the fastest.